Hey guys, hope you're doing well out there. Thought I'd do a video today covering some of the companies you guys mentioned in the comment section below. And so today we're covering Boeing and Planet Fitness stock. And I'll share my thoughts on whether I think these are worthwhile investments, at least in the current time. And I make these videos to hopefully provide value and unique insights to you guys watching. And so I thought, what better way than to analyze some names that you have requested. And so I will have timestamps in the description below. So feel free to jump around to the part that interests you the most. Now, before we jump into that, I do want to take a moment to thank each and every one of you that have subscribed to the channel. The support on this channel has honestly been absolutely incredible to see. We have recently crossed the 1,000 subscriber mark for the channel, and these videos really wouldn't be possible without you guys showing up to at least watch them. And so whether you're just a viewer or you engage in the videos by liking and commenting, or you're even a subscriber, thank you so much for your support on the channel and just allowing me to continue put out great content for you guys. And I know while my content may not get the most views or do great for the YouTube algorithm, I just try to put out content that at least I find interesting, and I know that will at least help one person who watches it. And so I've only been doing this YouTube stuff for less than a year, and the plan is to just continue getting better at it, continue growing this channel's community of members, and then of course on top of the list is continue to get better at investing. And so once again, thanks so much for your support. It really does mean a lot to me. Sorry for this little ramble, and let's get back to the video. Kicking things off with Planet Fitness, honestly, this is a company that I didn't even know was publicly traded. And so when the comments mentioned ticker symbol PLNT, I wasn't very aware of what company this would be, but just cool to see Planet Fitness is a public company, market cap of right around $5.5 billion. Also, on a side note, if you do find a video like this at least valuable and you want to see me cover other companies of your choice, feel free to leave them in the comment section below of this video. Maybe this can become a sort of series or something I do every now and then when I'm able to find the time. Just cover some names that you want to see covered on the channel. Now, Planet Fitness, like we said, $5.5 billion market cap, so it falls in the mid cap range, I would say. In terms of their forward estimates, and really the valuation for this company does trade at, well, not a wildly expensive valuation at 25.5 times, considering its growth at roughly 11%. So if you just take its face value of a PEG ratio, that's over 2 times on a price to earnings growth. And so from that perspective, you can say maybe would be a little overvalued at this forward multiple considering its growth rates. But they are expected to grow in that mid to low double-digit growth on that earnings side really over the next few years, and trading at that forward multiple right around 25 times. And so that's just something to keep in mind as we walk through this company's financials. We'll come back to this and really point out maybe some other opportunities that would be a better buy, in my opinion, at the current time. Now, with that being considered, with a relatively high valuation at least, there are still some things to like, in my opinion, for Planet Fitness. And there's mainly two things. This is from their 10K annual report that came out, I believe, a few days ago. There's really two main things that I love about this business. One is that their memberships, and the other is how their stores operate. So firstly, with their memberships, they basically have sort of a tier-based system where they have their monthly membership starting at $10. And for a gym, that's actually fantastic, considering they say the 2022 industry average is at roughly $60 a month. And so this is a budget-friendly gym with the base membership starting at $10, and then they have a Planet Fitness Black Card membership at right around $25 a month. That includes some membership perks like massage beds and chairs and tanning beds and things of that nature. And so even at that, $25 a month is a heck of a lot better than the $60 a month that is the industry average. Certainly around the area I'm in, the $60 per month average for your gym is pretty standard, considering you have gyms like a Good Life Fitness, even a Gold's Gym that again start at $60 a month and can go upwards up to $120 a month. And so for a $10 a month membership, that is honestly a great deal, and probably why so many people choose to sign up for a Planet Fitness membership, just the fact that it's a $10 membership. On top of that, they have an annual fee of $49, and so really you have this $49 annual fee and then monthly at $10. Really reminds me of sort of a Costco business model where once they get you through that door, it's that recurring membership fee that's really helping their business. And then on top of that, you have a tiered sort of payment system where the lower end is at $10 and then you have a premium version at $25. And really that difference isn't a whole lot, and it's still well underneath your industry average of other gyms at right around $60 a month. And so I'm guessing a lot of people choose to kind of bump up to this Planet Fitness Black Card membership at $25 a month. And so from that perspective, I do like how their cost structure is laid out, really how their pricing structure is laid out, really incentivizes new signups and retention of existing customers. And so membership fees, that's one thing I do like with this business model. The other thing I really like with Planet Fitness is how their stores are sort of laid out, where they have the majority of their stores as franchisees and then only a handful that are corporate owned. And so this really follows the McDonald's business model strategy, where the majority of their locations are franchisee owned stores. And then also they operate across various countries, namely the United States and Canada, but also across Mexico and Australia. And they kind of have this map to break down where their franchisee owned locations are. And so this is a business that if they took a page out of the book of McDonald's and then also a page out of the book of Costco, you kind of get Planet Fitness's business model. And certainly McDonald's and Costco are two phenomenal businesses. And if you kind of put those together in a gym, that's sort of what Planet Fitness brings to you. And so from that perspective, I think their business model is quite strong and laid out pretty well, where they have a good amount of customers continuing to flow in. Now, that is something to like, but along with that, you do have some things not to like over at Planet Fitness. And namely, that starts with their balance sheet. They are sitting on roughly $275, we'll call it $300 million in cash and restricted cash. And then total current assets right around $471 million. This was from their most recent quarter at the end of 2023, keep in mind. And so their total current assets coming right around $470 million. The issue lies in the amount of debt this company has, sitting on nearly $2 billion worth of long-term debt. And then on top of that, another nearly $21 million of current part of their long-term debt. Yeah, this company close to $2 billion in debt and just, we'll call it $300 million in cash and cash equivalents. That is really where the problem lies for this company. It is debt loaded to the sky, and that is something that is ultimately hurting Planet Fitness's bottom line in a pretty substantial way. We see this is for the year ended 2023. We're kind of looking at their annual report, so they have a year over year picture, with the 2021 year being on the rightmost column. And so you see a steady growth in that revenue coming up from 587 million up to 936, and then in this most recent year all the way up to nearly $1.1 billion in top line revenue. And so revenue is growing pretty steadily. On top of that, they do have operating costs and expenses also continuing to rise. Keep in mind, this is a gym, and so they have to go through a lot of remodeling both on the equipment and stores front. And so that operating expenses also rising along with your top line revenues. But even with that, they are able to generate more and more operating income, as in this most recent year, they finished at nearly $273 million in operating income. Now you see this line item, interest expense, over the past 3 years, each year they've paid well over $80 million in interest expense. That comes from their absolutely massive debt pile of nearly $2 billion at $1.96 billion of debt. That's causing them to pay just an absolute boatload on their interest expense. Nearly a third of their total operating income just goes in the form of interest expense. And so if this company can bring down that debt pile, they'll have a lot more room to bring down more and more net income. Now, apart from this, all things looking fairly okay over at Planet Fitness. Certainly it's not a software as a service business, so the margins aren't really there as a software business would be, but still you're seeing top line growth, you're seeing operating income expansion, you're seeing at least control in the operating costs on a year over year basis. You did see a nice tick up from 2021, but over the past 2 years, those operating costs and expenses have sort of been controlled and really won't scale, hopefully as fast as your revenues continue to move up. And so from that perspective, this company is looking fairly strong. They are still profitable on a bottom line. And so that is certainly impressive for a company that's quite heavy in CapEx and quite a low margin business that has, again, their memberships priced at just $10 a month. Considering at $10 a month and then on top of that a $50 annual fee, this company still is profitable on their bottom line, is still impressive. I would just like to see this interest expense come down. And in order for that to happen, their debt load has to come down significantly as well. So that from that perspective, that's the only reason I think why fundamentally shares of Planet Fitness really don't make sense to me at the current time. On top of that, as we said, we'll come back to the valuation, and at 25 times a forward multiple on that earnings side and just 11%, we'll call it mid-teens growth on that bottom line over the next few years, I can pull up a few stocks that in my opinion trade honestly at a better price to earnings multiple. You see Meta for this forward upcoming year trading at right around 24.5 times, a similar price to earnings multiple, expected to grow at nearly 34%. We can also bring up a company like Google, again trading at a lower price to earnings multiple than Planet Fitness at just around 20 to 21 times, also expected to grow faster at nearly 16% on their bottom line. And then we can also bring up a name that's not in the tech space, that is Nike, also expected to grow at a faster clip at 17% for the upcoming full year, and are trading at right around a similar forward price to earnings multiple. And so from that perspective, I think Planet Fitness isn't the most exciting opportunity in the markets at this time. While it's a pretty solid business model and the financials are looking pretty intact, I think that debt on the balance sheet is one point of concern. And then this higher valuation where you're paying nearly a 2 times on a PEG ratio is also a point of concern. And so from that perspective, I think both valuation and fundamentally not a buy for me at the current time. On top of that, you have a stock chart that's been making a pattern of lower highs and lower lows. So also in a technical downtrend, this has been really started back in November of 2021. And since then, as we said, in a downtrend, right now, it seems like it wants to come back to this $55 level, where if you want to pick up shares of Planet Fitness, just from a technical perspective, could make some sense. I would set a very tight stop loss at right around, we can call it like $53. So maybe just risking $2 in downside to make maybe another 15 in upside. Chances are if Planet Fitness breaks this $55 level, you're coming south to call it $44, $45 a share. That at that point, the valuation will look a lot better, will look a lot more compelling, and could certainly be a good buy at that point. Right now, I think the valuation certainly isn't there. And then also from a technical perspective is making lower highs and lower lows. So that was my take on Planet Fitness. Currently not a buy for me. I think there are better opportunities, like we said, in just a few other names like Meta, Google, even a Nike. Moving on to the Boeing company, ticker symbol BA. This is a stock we haven't covered on the channel before, but one that I do watch on my watch list pretty closely, and Boeing tends to make the news cycles quite a bit, whether that's for good or bad reasons. Now, this came out today on March 1st. Spirit AeroSystems unlikely to see a premium in sale to Boeing. So it seems like Spirit AeroSystems, which is a public company, ticker symbol SPR, is looking to be acquired by Boeing. And I believe this news broke today. And so on the heels of this news, Spirit AeroSystems stock was up right around 15.5%. And then Boeing traded down by close to 1.5% on this news. And so analysts are really seeing that there's no reason why Boeing would pay a premium to acquire Spirit AeroSystems. They're estimating roughly a $30 to $31 a share buyout, and Spirit AeroSystems after this news trading closer to $33. So right in line with what analysts expect. Now, this is a deal that I expect will take a long time to go through, and maybe it won't go through at all even, considering how much regulatory scrutiny these companies have on them, and probably for the right reasons. Considering Spirit AeroSystems also supplies parts and assets to Airbus, which is a direct competitor to Boeing, and so parts of this business would have to be sold to Airbus or another third party, also makes this deal a bit more complicated. On top of that, you have Boeing that is undergoing a ton of culture problems in terms of safety, and if they look to acquire another company that manufactures the fuselage for these planes, that could also raise a flag over at the FAA in terms of safety concerns. And that's exactly what's happening as FAA issues an order to fix the safety culture over at Boeing. And so the US aviation authorities did order Boeing to fix systematic deficiencies with quality control. We know for a fact that Boeing has been in the news for, in fact, the right reasons, considering that their quality of the planes really hasn't stood the expectations that we would expect from an airliner. And the FAA, again, saying Boeing must commit to real and profound improvements. Making foundational change will require sustained effort from Boeing's leadership, and we're going to hold them accountable along every step of the way with mutually understood milestones and expectations. And so really, this is something that's not new over at Boeing. They have been always under a ton of FAA scrutiny, and in my opinion, for the right reasons. You have this company putting the lives of people in their hands every time they step on a Boeing aircraft. And so I would expect quite a significant amount of FAA scrutiny, especially when you have disasters like the door of a plane blowing out mid-flight, or you have terrible crashes of their 737 MAX planes really over the past few years. And so this safety culture is something that I think will impact Boeing as a company, and then also impact them as a stock, considering how much they'll likely have to continue to spend and fix their safety culture issues and the image to the public. Now, on top of that, you have not a great financial statement over at Boeing. This is for their most recent quarterly report. For the last 12 months, Boeing brought in nearly we'll give them credit for $78 billion of top line revenue. That is a lot of revenue to bring in over 12 months, and that's broken up into their products and also some into services. Now, that revenue does cost them right around $70 billion to generate, and so right there, your margins get razor thin right from your gross profit perspective of right at $7.7 billion. And then on top of that, you have a fair amount of operating expenses, and so you get to an operating income that's actually a loss of roughly $700 million. Even last year in 2022, they lost roughly $3.5 billion just operating the Boeing company. And so the main point with Boeing is this is a business that's still not profitable, at least even on an operating basis, and profitability over at this business remains extremely unpredictable. There are certainly years where the profits over at Boeing do tremendously well, and then anytime they have a PR disaster or anytime they'll have to recall a number of planes and kind of implement a ton of fixes in them, they'll lose a lot of money on that. And so what that does is it makes it very difficult to predict how earnings will look like for Boeing, considering from a year to year, it can have massive swings. And like we said, net loss on a 2023 full year basis coming in at $2.2 billion. In 2022, you were closer to $5 billion. For a company this mature, still not profitable on its bottom line is something to be concerned about. Again, from a safety culture perspective, this company has quite a few PR disasters, and so that will also keep regulators on Boeing's back at least in the near future. On top of that, you have a asset or balance sheet, I should say, that's not great at all. You're sitting on right around $12.6 billion of cash and cash equivalents, another $3 billion in short-term investments, so we'll call it $15 billion in cash and cash equivalents, and then you're sitting on roughly $47 billion of long-term debt. On top of that, another $5.2 billion of short-term debt. So your total debt coming right around $52 billion. And so for a company that's still not profitable on their bottom line to have such a large amount of debt, that's also hurting their interest and debt expense, which came in at right around $2.5 billion in the most recent year. And so even if Boeing does turn around their operating income in, let's say, 2024 to be profitable, they'll likely still pay close to $2 billion. In fact, nearly $2.5 billion in terms of interest expense on this large amount of debt. And so they'll likely still have very minimal bottom line profitability, if any at all. And so from that perspective, I think the balance sheet really isn't looking great over at Boeing. They're sitting on a ton of debt. And then on top of that, you have not great margins. This is a highly capital intensive business. You're frankly just building out planes, and it doesn't really get much more capital intensive than that. Now, from a technical chart perspective, this is honestly one of the main reasons why I think Boeing still might be considered investable. And so from this perspective, you are sitting in a channel of higher highs and higher lows, and you now are coming down to the bottom end of that channel. And so from a at least swing trade perspective, you can look to swing the stock back up to close to $280, $290 a share, and your downside is right around $180 a share, you can call it. And so not the best risk reward, but certainly from a chart perspective, does look to make sense to maybe look to swing trade this company. Over the last 5 years, you have seen this company basically decline over 50%, and so it is still in a mega downtrend, but at least in the medium term, going back to May of 2022, this company is now in an uptrend. And so you have this level of support at $180. You could look to maybe set a stop loss at right around $190 and then hope for a reversal near the higher end at close to $270, $280 per share. That's really how I would play Boeing. I wouldn't really play the stock from a long-term buy and hold. I personally honestly wouldn't even play this from a swing trading perspective, considering how volatile the news cycle can be for Boeing, considering they have so many disasters and so many issues over the company. Really, you don't know what you can expect from this company, and also from a profitability perspective, very unpredictable. And so from that reason, I'm not interested in picking up shares of Boeing, at least at the current moment. That was my take on both the Boeing company and Planet Fitness stock, two names I haven't covered on the channel before, but I did get comments to cover these, and so we took a look at those. Also, let me know in the comment section below if you liked a video like this and want me to cover other names. As always, thanks so much for listening. Thank you so much again for 1,000 subscribers. We'll continue to keep this journey going. Be sure to hit that bell notification button so you don't miss out on future uploads. As always, I'll catch you guys in the next video.